we were able to pivot very quickly and move that plant, because of its modular nature, 900 miles to New Mexico, power it on natural gas out of our own wells, and be able to handle that raw gas composition, and therefore, again, maintain this vertically integrated model.
Good afternoon and welcome to the Assay TV. Very pleased to be joined here today by Don Mosher, President and Director of Desert Mountain Energy. So thank you so much for joining us today, Don. It's great to have you.
Very much my pleasure. Thank you.
Great, thank you. So for those of us who are unfamiliar with Desert Mountain Energy, could you give us a quick overview of the company?
We've built a vertically integrated producer of natural gas, condensate, and helium with a real focus on helium extraction. We've got projects in Arizona and New Mexico, so we're exclusively in the US.
Okay, great. And I understand the company recently confirmed the delivery of all the necessary components for the helium processing facility in New Mexico. So can you give us a bit of an update on what's happening there and what's the focus of the helium processing facility?
Yeah, because we're vertically integrated, meaning we drill our own wells, we produce our own raw gas, we'll be processing our own natural gas, condensate, and helium, and selling it directly to end users. We needed a processing facility that would be able to get us there from the raw gas stage. And the plant that we built was the first solar-powered plant ever built globally. We built it in a modular format with the ability to run it on any energy source and be able to handle any raw gas composition, with the idea that we would be putting the same modular style plants in different fields and different jurisdictions within North America and potentially all over the world. Now, we were going into production in Arizona in June, and we ran into some downhole problems. And because we'd done a $23 million raise in March of this year, and because we'd done some due diligence on some natural gas assets, knowing that 98% of all helium comes out of natural gas fields, although in Arizona we're in nitrogen fields with higher grade helium, we were able to pivot very quickly and move that plant, because of its modular nature, 900 miles to New Mexico, power it on natural gas out of our own wells, and be able to handle that raw gas composition, and therefore, again, maintain this vertically integrated model. But instead of handling nitrogen and helium in Arizona, we're now be able to handle crude natural gas, capture the condensate and capture the helium, and again, sell vertically, hopefully purified natural gas into California, condensate to a local heavy oil producer, and helium on spot price to different end users depending on grade requirements.
Great, that sounds great, thank you. And looking at Arizona, you've recently completed some drilling operations for a total of 8 wells, and I understand you made some significant discoveries as a result. Could you expand on the drilling operations and when production is likely to commence? Well,
because we've run into permitting issues with our production wells in Arizona, what happened was when we tested the wells, they were operating at 350 to 400 PSI, and our plant requires 225 PSI for input. When we went to put the wells into production, the pressures dropped down to 95 PSI. We applied for fracking permits, and we ran into some issues with the regulators. Arizona is not an oil and gas state. They have no oil and gas revenue. So all of a sudden we've encountered problems. It could take us 2 to 3 years to get these operating permits. And we couldn't leave this asset sitting out in the desert. So because of the modular nature of the plant, we closed on an acquisition of a natural gas field we'd done due diligence on, moved the plant 900 miles, and now we're going into production in New Mexico, and we'll wait 2 to 3 years to get our Arizona permits, and then at that point we'll put a new plant in Arizona and move into production there. And really this is a great opportunity for us to prove up a business model that we'd been talking about. The only thing that we've done is originally, instead of going into production in nitrogen fields in Arizona, we've been forced to pivot and move it the other way around, where now we're in a natural gas field with the same plant, but processing a different type of crude gas and powering it on a different energy source, but being able to look at other fields elsewhere in other jurisdictions in the US where the wells are already drilled and you're just really revitalizing an old traditional natural gas field without those massive capital expenditures that are required when you're drilling new wells.
Earlier this year, DME announced the appointment of Michael O'Shea to the board of directors. So can you tell us a bit about that and what he brings to the company in terms of expertise?
Well, if you look at Desert Mountain Energy, we've only been really building this company for the last 3 years. The current management group took over in the middle of August of 2020. And corporate governance is very important. You need a lot of independence on the board. And we talked about an independent board. Mike O'Shea has a great background in chairing an audit committee. He worked for Enbridge. He taught auditing classes in university. So with the addition of Mike O'Shea, we've brought more independence to the board, upgraded our governance. We have a fully independent audit committee chaired by Mike now, along with Dr. Kelly Ward and Weldon Stout, who are both also independents.
Great, thank you. And in terms of news flow and any upcoming announcements, what should investors be keeping an eye out for over the next few months?
Well, our goal now is to take our revenue streams, which currently we have multiple revenue streams. We own a truck fleet that generates a couple $100,000 in free cash flow a month. We've got a couple of drills that generate about $100,000 a month in free cash flow. When we closed on the natural gas field the 1st of July, we had natural gas sales in place on an existing contract. And with an operational plant, which we expect to be operational in the next couple of weeks, we will now build on those revenue streams. And we have a goal of being in free cash flow to the tune of about $1.5 million a month US. And that will allow us not to have to go back to the equity market for more financing, and we'll be able to self-finance more plants and acquire more assets.
That sounds great. Well, it sounds like an exciting time, and we'll look forward to hearing more from you over the next few months.
Thank you very much.